Welcome to our executive market briefing. The global financial landscape is a whirlwind of innovation, geopolitical shifts, and stark contrasts. This week, we saw the highly anticipated market debut of SpaceX, making massive waves across Wall Street. Simultaneously, a groundbreaking Iran deal sent ripples through the commodities market, impacting oil prices significantly. But while global headlines dominate, India's financial markets are navigating their own unique challenges and opportunities, demanding our keen attention. Let's first turn our focus to India, a market grappling with a significant foreign capital exodus. The Financial Times reports foreign investors' exit from India at record high, a trend causing considerable FPI selling pressure. Experts from Mint are weighing in, advising domestic retail investors to remain calm and leverage the strength of domestic institutional investors, or DIIs. The IBEF highlights the growing power of India's DIIs in Indian equity markets, acting as a crucial counterbalance. However, Samco's analysis, only 1 in 4 stocks standing, India's market breadth signals a potential storm, raises concerns about underlying market health despite DII support, suggesting a concentrated rally rather than broad-based participation. The volatility in the Indian market has been palpable. The Times of India reported a stock market crash today. Nifty 50 ends below 24,850, BSE Sensex down over 700 points, attributing it to various factors including global cues. Reuters highlighted that Indian shares sink on budget day as derivatives tax hike, lack of foreign flow measures weigh, indicating policy impacts. Moreover, the Financial Times suggests that India's stock market is failing to match growth in economy, sparking debate on underlying fundamentals. This comes as Yahoo Finance reports Taiwan overtakes India as world's 5th largest stock market, a development that underscores the challenges and competitive dynamics India faces on the global stage, urging for strategic policy adjustments to reignite broader market confidence. Now, let's zoom in on individual corporate movers within India. Manappuram Finance saw a significant jump, with Business Standard reporting it jumps 6% on Ban Capital's 26% stake buyout plan. This substantial private equity investment signals strong confidence in the company's future and the broader NBFC sector. Simultaneously, Jio Financial Services continues to be in focus, with Upstocks reporting its share price rises 3% on JV with Allianz for General Life Insurance Biz. This strategic joint venture with a global insurance giant like Allianz is a massive growth driver, promising to expand Jio Financial's market footprint and diversify its revenue streams, capturing investor attention, as highlighted by Samco. Continuing with corporate developments, Bajaj Housing Finance faced headwinds. Its shares settled 7% lower after promoter Bajaj Finance sells 2% stake, as reported by Upstocks. This promoter selling activity often triggers investor apprehension, explaining the stock's decline despite strong underlying performance that saw it grow from 0 to 1 lakh rupees crore in 8 years, questioning why its stock remained at a record low, as the Indian Express queried. On a positive note, Shriram Finance hit a record high, cross, ING, 1,000 rupees for first time, after India clears stake acquisition by Japanese entity, boosting investor sentiment and sparking discussions on whether it's too late to buy, according to the Economic Times. India's financial regulatory landscape is also making headlines. The BBC reported why Jane Street, a US trading giant, is in trouble in India, followed by the Wall Street Journal confirming India cracks down on Jane Street's lucrative derivatives trades. Frontline magazine detailed Jane Street's $5 billion derivatives scam rocks SEBI, highlighting the regulator's resolve to curb market manipulation. Amidst this, S&P Global noted India's private credit market is coming of age, showcasing growth potential. ClearTax emphasized green finance in India, importance, opportunities, challenges and key initiatives, pushing sustainable investments. However, the print's article, Ghost of the Commodities Controller, Why India's New Financial Law Feels Like the 1970s raises concerns about potential over-regulation, reflecting an ongoing debate between investor protection and market liberalization. Despite regulatory scrutiny, India is experiencing an unprecedented IPO boom, as highlighted by international banker. New listings like Piramal Finance, whose share price rises after market debut, and iFinance, which lists at par with IPO issue price of 129 rupee per share on NSE, BSE, demonstrate robust primary market activity. This boom is fueled by domestic liquidity and a growing appetite for equities. Equitymaster also points to 5 mid-cap stocks leading India's next-gen market revolution, indicating that beyond the large caps, innovative mid-sized companies are emerging as significant drivers of future growth, attracting considerable investor interest. Shifting to the global macro landscape, US interest rates remain a critical focus. For savvy savers, high-yield savings accounts are enticing, with rates up to 4.1% APY as of 15 June 2026. However, borrowing costs present a different picture. HELOC and home equity loan rates show a significant 61 basis point spread, indicating complexity in consumer credit. The market is closely watching the Federal Reserve, especially with discussions around leadership. Bloomberg suggests that if Trump trusts Fed Chair Kevin Warsh, it could profoundly impact interest rates and economic policy, as Warsh's Fed is likely to hold rates steady, potentially signaling stability or a cautious approach to monetary tightening. In commodities, the US-Iran deal has been a game-changer. Reuters reported oil tumbles on US-Iran deal framework, with traders swiftly adjusting their positions. We saw the Dow climb more than 450 points for record close as oil tumbles, illustrating the positive market reaction to easing geopolitical tensions and increased supply prospects. However, while oil dips, gold has taken an unexpected hit. CNBC stated, gold slumps to 6-month low even as inflation fears rise. Here's why bullion is out of favor, puzzling many investors who typically view gold as an inflation hedge. This suggests a broader shift in risk appetite and a move towards other asset classes, or perhaps a reassessment of true inflationary pressures. One of the week's biggest global stories was the SpaceX IPO. Bloomberg detailed SpaceX raising $75 billion in record-setting IPO as Nasdaq debut awaits, highlighting unprecedented demand. Yet, there were concerns, with reports that SpaceX cuts retail IPO allocation to low 20% range, disappointing smaller investors. Despite this, the stock soared, as it jumps 20% in first full day of trading after record debut. Legendary investor Ron Barron's confidence shone through, as he bought $1 billion of SpaceX shares in IPO, lifting stake to $25 billion, underscoring institutional belief in the company's trajectory. From a startup to $1.8 trillion, SpaceX's journey has been nothing short of spectacular, rewarding early investors handsomely. Beyond SpaceX, the tech and AI sectors continue to drive global markets. Nvidia is flexing its financial muscles, with plans to raise at least $20 billion in first debt sales since start of AI boom, signaling aggressive expansion and investment in its AI dominance. KKR also weighed in, stating the AI productivity boom to keep on going, but warns of extreme trend not seen since the 19th century, emphasizing both the immense potential and inherent risks of this technological revolution. In the M&A space, Fox made a significant move, announcing it will buy streaming device maker Roku for $22 billion, consolidating media and streaming capabilities. Furthermore, Corning's Amazon deal validates the AI optics boom for GLW stock, further highlighting the widespread impact of AI on diverse industries. In summary, we've witnessed a complex interplay of forces. India continues its dance between robust domestic liquidity and persistent foreign selling, highlighting both resilience and areas for policy attention. The corporate landscape, particularly in finance, shows dynamic shifts driven by strategic partnerships and regulatory actions. Globally, the groundbreaking SpaceX IPO captivated markets, while the Asiran deal reshaped commodity outlooks. The AI revolution, spearheaded by giants like Nvidia, continues its relentless march forward. As investors, staying agile, understanding the interconnectedness of these markets, and discerning value in both local and global narratives will be paramount.